Everything you think you know about trading is wrong. Let me show you exactly why. Imagine there are four traders: Trader A, Trader B, Trader C, and D. And let's just assume we can monitor the number of wins, the number of losses, the profits per winning trade they make, the losses per losing trade they make, and of course the overall outcome. So we can see what kind of trader we really want to be. When we go one step further, let's assume Trader A wins 7 times out of 10, loses 3 times, and the profits per winning trade are small. You know, he sees a profit, he takes it. That's your typical private investor. The losses per losing trade are big because, again, like your typical trader, he doesn't want to take a loss, he lets it run. I know a lot of you in the comments are going to say, hey, that's me, Alpesh. Overall, his outcome's loss making. And here's what's interesting: he had more wins than losses, but he was loss making. And he's going to keep going because he's going to say, well, I only need to do a little bit more, and he's going to wrongly assume that he just needs more wins. Let's look at Trader B. Trader B also has 7 wins out of 10 and 3 losing trades. His profits per winning trade, some are big just because he lets those trends run, and some are small because, you know, the market changes direction and that's what happens. But he's very disciplined. He manages, or rather she manages, to keep those losses per losing trade small. Overall, she's profitable. Now, before we go to Trader C, let me tell you something. That's the sort of holy grail. That's the professional. Trader B, the sort of the hedge fund manager type. Let's look at Trader C. Now, Trader C is also somebody who is profitable. How? They're only right 4 times out of 10. They've got more losses than they have wins. Again, their profits per winning trade are small and big, and their losses per losing trade are small. But they can obviously be profit making thanks to 1 or 2 of those big wins out of 4. Now, of course, they would rather be Trader B, who wouldn't. But the fact that they know they can survive by only having 4 wins out of 10 means they're in a very good sweet spot, because if they move up to being like Trader B, they're even more lucrative. So what does Trader D look like? You take a guess. What do you think Trader D, don't worry, I'm not teasing you. Trader D, again, 4 winning trades, 6 losing, only small profits here. They keep taking them, they think they're scalping, and they let those losses run. Oh, they'll take care of them some other time. They're loss making. They're losing a fortune. The professional looks like C and is trying to be like B, right? It's as simple as that. The private investor is an A or a D. It's as simple as that. Private investor is an A or a D. The professional is usually a C, trying to be more like a B, but usually stays in the C category. And we're fine with all of that. Hopefully that gave you an insight of what trading actually is about, not quite what you might think it's about.